Hello, I'm Lelda Smits for the Finance News Network, and joining me from Aus Tin Mining is CEO Peter Williams. Peter, welcome to FNN.
Thank you, Lelda.
Now, Aus Tin Mining has just released the results of the pre-feasibility study for the Taronga Tin Project. Can you outline what were the highlights?
Be delighted to, Lelda, and we were absolutely pleased to be able to announce earlier today the results from the pre-feasibility study, which confirmed both the technical and economic viability of the project. Some of the highlights were a maiden ore reserve of 22 million tonnes for 35,600 tonnes of contained tin. We also confirmed that we've got a conventional open cut and processing route to produce approximately 2,800 tonnes per annum of tin in concentrate over a 9-year mine life. We're expecting to generate revenues just over $700 million over the life of mine at a cash cost of just over $16,500 Australian per tonne of recovered tin. We've got an initial capital and pre-production cost of about $88 million, and the net present value for the project is estimated at about $63 million with an IRR of about 27%. This is all based on a tin price of about $25,000 per tonne. I guess with analysts forecasting prices as high as $30,000, we believe there's significant potential to improve the economics further.
Right, now the company has also announced an ore reserve. Can you explain how this milestone advances the project?
Sure. Look, the announcement of the ore reserve has certainly elevated the Taronga project up the curve. And I think one of the interesting things is that there's only two other tin-focused projects, greenfields projects with ore reserves, as opposed to simply having a mineral resource, and only one of those others is actually compliant with the new JORC 2012 code. The requirements for feasibility studies under the new JORC code, they're far more stringent in respect of what material can be included in the study. And whereas historically companies have reported a mineral inventory, often supported by inferred resource, companies now must report feasibility studies based substantially on proven and probable reserves. So what this means for us is that we basically have had sufficient material, probable status that allows us to report on the pre-feasibility study, and highlights the fact that we don't necessarily need to do significantly more drilling in order to be able to take the project forward.
Right, and can you elaborate a little bit more on the areas of upside identified in the study, in particular the grade upside?
Yeah, look, I'd be delighted to. During the pre-feasibility study, we identified a number of areas of potential upside. They included increased plant feed grade, but also increased tin recovery, the inclusion of byproduct credits such as copper and silver, as well as potential reductions in capital and operating costs. Incidentally, we're going to be targeting a 30% increase in revenues for a combination of feed grades, tin recovery and byproducts, but that's based on work that we identified during the pre-feasibility study. And for example, one of the areas in terms of the feed grade is that Mining One, who completed the mineral resource for us, estimated a resource grade of 0.16% tin. But they also reported a probable true range of grades between 0.19 to 0.25% based on a trend where larger samples tend to provide a higher grade. This was evidenced when previous owners were taking bulk samples of up to 3,000 tonnes and were able to get assays in the range of 0.21 to 0.24%. Now, as part of our study and our target to increase revenue, if we were able to demonstrate that we can increase the grade from the ore reserve of 0.16 up to just 0.19, that would have the impact of increasing the NPV of the project from about $63 million up to $146 million. So very significant opportunity. We'll be certainly exploring those further during the definitive feasibility study.
Certainly, and if we can look at funding now, could you talk us through your funding model and perhaps discuss if you're in talks for any funding options at the moment?
Yeah, look, sure. And I'm not at liberty to disclose sort of specific details, but what I can say is, mid-last year, we identified what our preferred funding route for the project through to production was going to be, which was going to comprise bank debt or project finance, financing from offtake parties, and then potentially mezzanine finance. Given this sort of preferred funding structure, we actually approached the feasibility study from the perspective of delivering a project model that was going to be attractive to these types of counterparties. And one of the examples that one of the things that we did, for instance, was that in the early years, we've actually reduced our strip ratio quite significantly so that our cash costs are lower, and that we'll actually be able to generate better financial metrics during particularly the first 4 years of the project, which is what we anticipate will be the financing period. So it gives us a robustness, even for instance at today's tin price of $23,000 on the operating margin. We'd expect it to be sort of just over $8,000 or potentially around sort of $25 million a year.
Okay, and finally, Peter, what are the next milestones Aus Tin Mining are working towards?
I guess some of the key milestones for us going forward will be firstly securing the funding for the definitive feasibility study, and we're working, as I said, on that at the moment. Next step will be to undertake and complete the definitive feasibility study, which we expect to complete by March 2015. In parallel with that, we're going to investigate a number of those areas of upside that I've previously flagged, but we're also going to undertake some exploration across the tenement package that we have, as we have a number of opportunities which are proximate to the main Taronga project, which could provide either high-grade supplementary feed or potentially sort of an extension on the life of mine. And we remain very committed to achieving our overall objective of achieving production by the beginning of 2017.
Well, Peter Williams, thank you so much for the update to Aus Tin Mining.
Thanks, Laura.